right? So we have what we call price drivers, right? And when you're looking at your charts, you can see this daily time frame. You can see that price has a particular pattern in which it respects, right? That we have bullish markets, bearish markets, and all of that, right? All these concepts that have been taught in the financial markets, all these concepts of higher highs, higher lows, all these things have been a derivative of the algorithm, right? There is something called an algorithm that actually controls price movement. That means you see price selling, buying, having a definite pattern, right? All this move you see here is controlled by what we call a price algorithm, right? So what's the price algorithm? An algorithm is like a software, right? There's a software that only powers or controls the movement of this, like all these candles. Let me make this clear. There is no candle that you see on the financial market that is actually without a reason, right? So all these candles you're seeing, they actually have a reason. So there's no candle you find on your channel that does not have a reason why it is printed. And each candle has a particular reason. So it's just like as you have your phone, right? Or maybe as you have your phone, each function in your phone, like the algorithm or the software that runs your phone, has a reason. You have the applications that control location, like the Google Map and all of that, right? That applies to trading. So every candle you see here, the same way your phone has different functions. You have the map, we have the calculator, each app having a specific function. So that is how these candles that appear in the financial market also have what specific intentions, right? So whenever you see the market buying, selling, it's not just doing it randomly. That's why sometimes if for those of us that know how to make sniper entries, we're able to get with precision what let's say with precision where price will reject from, right? So if there was no intention in the market, that means there will be no need for making sniper entries. There are some people that don't want to make entries at that point. Like I said, I caught a trade on this 100, which I posted in the community here, I think earlier this week. I was talking about 26500 levels, right? So that is one of the price drivers I'm talking about. So when I saw price going to 26700 levels, I'll talk about how I analyze that as we go on. But I anticipated that price was going to settle around. You could see it was very beautiful today. I caught the trade right from the top, like at the very week, right? So understanding that there is something that drives price is what gives you clarity, right? And what drives price isn't necessarily buy or sell pressure, right? Some people believe that for the market to print and buy, that someone actually buying it. Like, think about it. So, are you trying to tell me that as the market is buying and selling, someone has the time to be clicking buy when the market comes down, it sell? Like for years, if you want to look at this chart, we have candles that are printed for years and months, right? I see the oldest candle on the BTC chart is as far as August 2017. That is the oldest candle there. August 2017. That means if you want to do backtesting on this chart, you can go as far as August 2017. That is about 5 years ago, right? That's 5 years. So the item doesn't mean that someone has been busy clicking buy, clicking sell, clicking buy, clicking sell. When the market moves a bit, just click sell. That is not true, right? The market is moving. The charts are moving based on what we call the price algorithms. Right? It's not necessarily buying pressure. It isn't necessarily selling pressure. It isn't necessarily orders or volume. That is not what controls price movement. So price has definite things that drives it, and that's where the concept of smart money comes to play. So when we're talking about smart money concept, talking about specific levels in which we expect smart money to get involved. Smart money isn't getting involved in every part of the trade. That means when the market bought from, let's say, as the market bought from here, from this point to this point, like I can see that there was something like a relatively equal high. So there was something like a relatively equal high at this point here, and as you can see, this class will not be so easy for those of you that trade all those funny concepts, support resistance. I don't trade that, right? So I'm more of a smart money trader, like trade smart money and ICT, right? So for those of you that trade double tops, double bottoms, so those problematic patterns of trading, you would have looked at this as a resistance, and then you see market buy through. So my point is that it's not smart money that is controlling each and every candle in the market. It is a price algorithms. But smart money gets involved in the financial market at specific levels, at specific zones. So look at this chart. I can say, okay, this is how smart money gets involved. Smart money got involved around the year from this buy and then up to this point. This is where smart money got involved, this area here. So from here, you see the buy and then this impulsive move and then market, it took out stops and then you can see broke down. So you can see that someone actually brought his let's say his objective to the market here. Right, the market was just ranging up down, up down, up down, up down. Then suddenly you could see this consecutive buy candle, and then what happened? Took out the dump rated traders, the emotionally inept, and then took price lower. So smart money only gets involved at specific levels in the market, not everywhere. They're not just clicking buy, sell, buy, sell. So this is where many smart money traders don't understand trading. Like they believe that because they learn smart money concepts, that means they have gotten the holy grail. It's not the holy grail. You have to understand the other things, right? So it's not all about the market buying, selling, buying, selling, buying, selling. They're not the ones controlling that. Smart money, they have where they get involved in markets and they have where they exit. And smart money is always looking for places that that trap zones, like double tops, double patterns, all those channels, whatever, flag, all those. I don't trade them, right? So I can't really name them because I can't remember what I don't even use, right? So if I was smart money, I would be trying to trade against everyone else, right? I'd rather get my order at the best possible position. So smart money is always trying to get the order at the best possible position. So you look at these areas like this, all these areas, these are the best to sell, right? So instead of smart money selling at let me bring out my horizontal rate at somewhere like here, they want to sell at a better price, so they will deliberately take price higher, take out the dump rated traders, and then sell somewhere around there. So you sell around there on 48136, which was wow, this was a very nice number, right? So this was a kind of bank level 48,200, right? So price came around 48,200 and then went to the right. I'll talk about bank levels as I continue. So bank levels, I'm not talking about it just now. Bank levels are levels in which smart money traders like to get involved in the market, and usually they like using whole numbers: 20 levels, 80 levels, and 0 levels, right? 8 2 zeros. Sorry, 8 2 5 and zeros. So we're looking at numbers like 80, 50, all right, and zeros, just those whole numbers, right? So they don't really have time to place in their limits at levels like something like 4 9 3 4 4 4. Just all those random numbers. So they're like looking for whole numbers, right? So this was a beautiful place to sell off. They took 8,200. It must not be at the exact mark, but it kind of went to 48,211 or thereabouts, and then it was a bank number, a 200 level, 50 level, 500 level, whatever. You must also have a 2 and then 800 level. Those are the levels that smart money gets involved. 2, 5, and 8, right? So he got involved at this point and then took price lower, right? These things may not make sense because I will be posting this video on YouTube, right? So for as you get to understand the things I'll be teaching you, you may need to refer back here and then get a proper understanding, right? So let us continue. So now this was what I'm trying to say. I'm not to say that the first point I'm making here is that it is not smart money that is controlling the charts, like the buy, sell. It's not smart money. So don't get that wrong idea in your head that the smart money that is controlling all the time movements. The candles are controlled by what they call the price algorithm. That is a software that controls price, that makes sure the candles are being offered and brought to, like, offered at different prices, right? Up, down, imbalances and all of that, right? So now smart money, I've said it to the number one. Smart money isn't the one controlling the market, like taking price up, down, right? They get involved in specific levels and they get out at specific levels. So if they bought here, where would they look at that? So they look at another area I don't traders will likely get involved. And where is that? This point here, right? This point. So why is this point? Because, well, I can see something like a EFS. I got something like a support level, right? Support level. So all those dump that I've seen it's a demand zone. But it broke structure. Be like, demand zone, it has broken up one. Nope, that is wrong. So you see markets blasted through. Where again we're looking at buying here. All this is why if you are trading all those support and resistance, you are prone to make more losses than profit because you are bait and it's like you're a rat to smart money. Smart money is the cat, right? You're just a bait to smart money, right? If you cannot beat them, join them. That's why you should learn how to trade with the smart guys, right? So you're learning how to trade with the guys that are the predators, right? So the better that you trade with the predator than trying to be a prey every time. So if you're trying to buy here, you have been clapped. Trying to buy at this point, you have been clapped. You're trying to buy here, you have been clapped. Anywhere you're trying to buy, you have been clapped. And the best thing is that sometimes price may actually give you hope, right? If you are trading as a support and resistance, will be support zone, you got a mark here, right? And the funds that price will make you feel that it's going to go your way. So it's just be going up, down, up, down, up, down, up, down. It's not go at once, right? But this was when they get the bought here and they're selling up here. So you can see, boom, price went lower. All right. So that's one of the best break your consciousness. Number one, the candles. I'm seeing this over and over again. So you seek into your consciousness that it's not smart money that's controlling everything you see on your chart. They have specific levels they get involved, and they have specific levels that they're leaving the charts. Right. So get that into your mind. Right, so every candle has an intention. Every candle has an intention. Every buy candle, no candle is just printed just like that. There is, do you know that if you are able to catch just even 200 points in the market, right, using good leverage, you can make a shit load of money, right? So why would the movement of price be just random when anyone can make a shit load of money for just a little price movement and all of that, right? So have that your consciousness that price will always respect certain levels, right? The market must always respect certain levels and go to certain levels, right? So now let's go to the topic of today. The topic of today is price drivers, right? So now we have understood that it's not smart money that is controlling buy, sells, controlling all the candles. What are the things that are actually driving price? And these are what I call the price magnets, right? The drivers of price. Those things that actually control, or let's say, the price of the price algorithm is designed to respond to or to follow, right? There are certain things that the price algorithm is designed to follow or to respect. There are certain things, and that's what I like to bring to your consciousness. And it's very simple, right? I know many of you may think that it's going to be something constant, right? It's not market structure, it's not institutional candles, it's not all of that, right? The two things that actually, right, the two things that control or drive price, the two things that control or drive price are, I'm coming to deploy my mentee, asking like a class, maybe somewhere, until I say it's everybody, okay, I've replied it, right? So this is a combined class, the YouTube mentorship students and then the pay mentorship students, right? So let's go. So there are two things that control price movement, right? And I've told you that it's not smart money that's controlling the delivery of price. They have where they get in and where they get out, right? There are two things that drive price. And number one, and these are the things I would like to show you, right? So we use Bitcoin, we'll do some backtesting, right? I don't trade Bitcoin, so thank God I don't trade Bitcoin. So if I traded Bitcoin, you would have seen some levels on my chart and all that. So I don't really trade Bitcoin. So we could use Bitcoin to just do some analysis, right? So I like practical classes, right? They prove that what we are teaching you works is practical, right? I am not the kind of teacher that will come and teach you bullshit, right? That's just that you buy when the cater crosses, do this, do that, and things that don't even work, right? I love teaching in such a way that you can see what I'm teaching you on the real chat. If I'm teaching you something now, you can go in at that moment and find what I'm teaching you, right? So if you think what I'm teaching you is not working, then you can go to the chat and find it there, right? So now I want to teach you certain things that control price. Just two. I just listen to. I don't want to go too far. And I've talked about bank levels. I may not really go deep into that because it's something that is actually combined with smart money concept, right? It's not something that that you could just trade off like that, right? So if you're not trading bank numbers like that, you keep getting caught up, right? So they have specific rules to that. So the first thing that drives price, number one, is liquidity. And this is the first thing that drives price, liquidity. Amazing, right? And the second thing that drives price is what? Imbalance. That's as simple as that. So the two things that drives price, that drives the price authority, right? Liquidity and imbalance. That's all. Imbalance on the bigger time frame. Let's say if the price is flat, I don't just leave it like that because I have seen these things work on 5 minutes, 10 minutes, all of that. So these are the things that drive price, liquidity and imbalance, right? Just two things that drive price, liquidity and imbalance. Now let's start with the first one. When we are talking about liquidity, some people have actually brought in so many definitions of liquidity, which largely some of them are wrong, right? Liquidity, an average trader or an average smart money trader, right? An average trader that is not smart money trader will say that liquidity is the volume, or let's say amount of money in the market that is correct to an extent and not agreeable. Some people that trade smart money will be like liquidity is double top, double bottoms, all those things, right? They're actually correct, but that's not all that liquidity is. Basically, I give a very simple definition to my students, that is to my paid mentorship students, and that's what I want to bring your way. Right? A simple definition to liquidity is where the money is. That is also what it is. White tigers is where the money is, right? So I like using I'm not from the white country. Let's just make that way. Where the money is. That's what liquidity is. It isn't necessarily double top or double bottom or whatever. That's where the money is. And what I mean by where the money is, where money is, it means that the places that people would want to get involved in the market. And what liquidity is. Like those places that people would want to get involved in the market. That is why we can classify liquidity as double tops, because people are taught that if the market first touch. In fact, I was even watching a video by I don't want to mention the name because of I don't want problems. It's a popular guy. He has more than hundreds of thousands of followers, and he said that he trades double tops and he trades triple tops. That he has a 50% winning rate and all of that. Right, all those stories. I don't know. So he said they had okay. Alright, so someone was distracting me in the Telegram group. Was kind of reading these messages, right? So as I was saying, liquidity. When you look at liquidity from this standpoint of where the money is, right? What I mean by where the money is, it simply means where people would want to put in their money, right? So whenever you click a buy or a sell, you're putting in your money in the trade, right? When your trade is in your wallet, for some of you that use wallet, some of you that put it directly in your MT5, the money is just there, right? The money is not involved in the financial market. So if you leave your $100 in your trading balance and you go and come back after 1 year, you still go to the remain like that, right? So, but whenever you click a buy, whenever you click a sell, that is actually where you're putting your money into the market. That's where the money is, right? So whatever place in the market would give you that reason to put in your money, like clicking a buy or a sell, that is what we call an area of liquidity. That's the simple definition of liquidity. So that's the things that control prices. What controls price algorithm? Number one, where people would want to put in their money, and number two, imbalance. Now, because of imbalance in something, I have made a shitload of money from this imbalance on the channel. You see, if you are able to combine these two things and achieve liquidity and imbalance, you will see the difference in your trading, right? Because you're able to accurately predict where price is going and where price is coming from, right? So these are the two things that control price, not your bullshit resistance or demand or supply zone, not all this funny concept. It's not your harmonic pattern that is driving price. It is liquidity and imbalance. Your harmonic pattern is only used as a confluence. Your institutional candles, your concepts, indicators, they are only confluences to confirm to you, but not to the price algorithm, right? It is to you that it's a confirmation to, but to the price algorithm, it is not nowhere a reason why it's buying. So if price sells off a zone, it is not because of your harmonic pattern is sold. It's not because of your resistance zone is sold. It's not because of your whatever you trade that is sold. It's because of these two things, liquidity and imbalance. That is all. That is what price is respecting, right? So under imbalance, we have what we call rebalancing, right? That is price coming back. So I'll explain that now. So now let's talk about liquidity before I just go to the imbalance, right? In a sense, you can see liquidity as imbalance, but I do not want to combine it. Let's just make it separate, right? Because if I want to classify imbalance as liquidity, it will be kind of difficult to give a distant explanation, right? So let's just stick with liquidity and imbalance, right? So liquidity, you are referring to areas in which people would want to get involved in the market. For instance, double tops. It's not only let's say restricted to double tops and double bottoms, right? We have the whatever pattern, like the bullish flag, bearish flag, asymmetric triangles, head and shoulder, I don't know, cup and handle. As I remember, cup and handle. These are just indicators. I can remember cup and handle. That was one pattern that I never understood. I looked at cup and handle. I looked at that my head could not just grab it. I just left it, right? So I won't keep myself, right? I could not just understand up and handle. So I left it. So those are the patterns that can be classified as liquidity. Whatever reason that you want to get involved in the market is called liquidity. So you cannot avoid this, right? The only thing is that you want to be trading, or want to put in your money at the right places, right? So if you understand liquidity, you would want to put in your money at the right places, because there are places that you should not put in your money, right? So liquidity is simply where you want to put in your trade. Like for me, I love trading smart money. So the places I look at are like this 100 that I got, which you can see it in the group. If you go up some days back, I was looking at a key level, a back number 267, and I saw a break of structure, a good imbalance below. So I knew price was likely to go down, right? So that's how I sold it, right? So let me kind of annotate it here. Trading view, guys. It was kind of the report, right? So now we have got so much liquidity is. What is imbalance? What is imbalance? So imbalances can be defined as inefficiencies, improper price actions, and inappropriate delivery of price, right? So what do I mean? Now, based on the nature of price algorithm, that's what controls price movements. Price is supposed to offer to both buyers and sellers, right? What do I mean? So if the market is trading down, let's look at my tool. So the market is trading down. The market, this is how the market is designed to move. That is where the lower high and lower low comes into play. Market is supposed to move this way. We're trading down. We're supposed to be doing something like this. Right? But in a so many instances, the market is moving impulsively. What the market is doing is creating imbalances, right? You understand this imbalance class when I release my video. I'll be releasing maybe some hours after now on displacements and inefficiencies. So I'll just explain it here. So an imbalance is when price is not offered as it ought to. That means we have two kind. When you see gaps in the market, I would have done a drain. But since I can see the reach out, I will see reach out expense, right? So an imbalance is where you can see only sellers or please video. Can you guys hear me? Can you guys hear me? Can you guys hear me? Just type in the group if you can hear me. Just type. Someone wants to speak.
Yes, we can hear you.
All right, thanks. We're talking about it. So I was saying, imbalances are gaps in the markets. There are gaps, and they are way they are traded. So imbalances, for instance, you can look at this point here. At this point, what can we find there? We can find that price only sold. Look at the price is moving. Market has been, buying, selling. But at this point, say, did you see the buy candle? No. So this is also called an imbalance, where you see only buyers in the market or only sellers in the market. And the price algorithm is designed to do what? To fill in gaps. That means whenever you see a gap, markets should do what? Should fill it. It should come back to fill up that gap and then continue going down. Alright, so market should fill imbalance, go lower, fill imbalance, go lower. So whenever you see the market creating gaps, you don't see only impulsive candles, those are imbalances. And how do you mark up imbalances? You simply mark from where you can see the wick of the candle, upper wick, like from here, like this is the last imbalance I can find there. From here to here, right? I think price has kind of filled it a bit. So let me just bring let me just jump to this point. So I take price back here. Let's kind of slow things down. Okay, yeah. So I'm saying, so look at this market here. What I mean by imbalance. So look at this. So you mark from this point to here. So you're looking at where you can see the last push up down. So in that gap, this way you can see only sellers, because Although, look at this candle closely. Although that you can find that this candle is a week, right? They were actually buyers here. Someone actually bought from here. The market actually opened around there, and then it was bought, got here, and then sold down. That means this was where the last place that buyers got involved in the market, or the market bought, not buyers, right? So this was the last that the market delivered to the upside, right? So you mark from the upper week right to the last place, you can see what a rejection. So this is the imbalance. So this is the first imbalance. And now the next imbalance is where the same thing is you mark from where you can see the rejection to the upside. This is another imbalance, right? You can see imbalance. So you continue doing that. So these are the things that price is designed to do, what? To fill. So price is designed to fill these gaps. This is what drives price. So drives price. Imbalance and liquidity. Nothing again. It's not resistance. It's not your channel. Or those stuff. It's not what is driving price. That's not making the price to buy or sell. The market is to take out to answer to liquidity regions. That's why markets would usually come take out double tops and double bottoms and all of that. Right. So now we have identified what an imbalance is and all of that. So now, how can we use our advantage? Right? You know, one thing about so many concepts we learn in forex today is that they tell you that this is how it is done, but how can I use to my benefits? Right? Now, some people can study demand zones. Oh, yeah, how can you use the demand zone to your benefits? You learn money patterns. How can you use the benefit? That is it. You make money when price is going as you want it to. So look at what price is doing. You can see that everything price has been doing was. Look at all price has been doing, has been trying to do was to fill this imbalance. So all price has been doing. Let's look at this. So this is why market has been just going up, down, up, down, up, down. So if I saw this shot, I would have looked at for what buyer opportunity. So looking at for price to do was to kind of fit this imbalance. Right. So this was the reason why price has been going up, down, up, down. The market has tapped into the imbalance, and then you can see I'm using market tap into the imbalance. Look at how it gave that heavy rejection, right? If you saw it, wow, oh my god, this was a beautiful setup. Let's just look at something there. Let me take price back to that point. Amazing. Now I want to start by imbalance. An imbalance, number one, an imbalance must not get inside. Like once price taps an imbalance, that area becomes an area of interest. I mean, price must not necessarily come all the way inside, right? Market cannot stop. Markets, wow, this is something I want to teach you now. Now, look at this week here. Look at this week here. Look at this week here. This week. So people who have looked at this week as something like a resistance zone. Look at something like a resistance zone, right? Some people have looked at this as maybe a supply zone. Those jump traders, right? They look at this as a supply zone. What the market did? The market did was it switched into this. Whoever was trying to sell here, because some people trade. Some people are very a kind of. I heard that as someone I was learning how to trade earlier, there was a particular strategy that someone was paying at $1,000 for. And what was the strategy? That they, whenever you carry place, you mark the upper week, lower week, open price, and close price. So they're using that for as a result of support, right? They mark open, close, upper week, whatever, as their result of support zone. So those are what they do that connected to them taken out here. So price did what? So if I was watching this chart, what should I have likely done? So for watching this, I've seen price do was straight into the imbalance, right? So let's see what the next candle did. Let's see. So now those dumb traders that did that particular thing of marking those levels, they would have been trying to get involved there, and they're taken out. So let's see. Look at this. Wow. So now the next candle did was it took us. If you are using that same pattern, you would have also been targeting the high because the market could not break this high. And the market did was it took you out again. So it took out the previous day high. But this is also a form of liquidity. PDLs and PDH are actually liquidity points. Previous day's highs and previous day lows. So what do I mean? A previous day high, you just simply break out your horizontal ray or whatever tool you use. Just mark it. So for the PDH from here, that was here, this point, this was the high and this was the low. So this candle did was it opened, took out the PDH because PDH are usually points that people like to get above the market. That's last rejection or the lowest rejection. These are areas of liquidity. Now, so it's not only double top and double top that are liquidity. It's not only written patterns. Daily highs, daily lows, monthly highs, monthly lows are also areas of liquidity. mark that down. So write that down somewhere if you are writing something down. All right. So the market did what? It took out the PDH. So this was the PDH here. Let me look at my call out here. Call out. So the PDH right here. Just here. So the PDH previous daily high. So PDH. So if I saw this happen, wow, amazing. So this is a PDH previous daily high. So and did what the market did what and did was it pushed into the imbalance furthermore. So if I was looking at this, I would have been trying to sell this market, right? So let's see. I would have marked here, right? This zone for itself. This wicked candle that actually pushed above, right? So I will just mark a high. I want to sell above that high, right? I'm looking at. I want to sell above that PDH, right? So let me just see if I would have gotten an entry on maybe on the 2 hour, right? This is actually clean up. So that's why I might have that place up. All right, so let me see if I can get that place. Right, where was it? All right, so this was it. So this was it. Right. So this was that PDH. Okay. Is it a 2 hour time frame? Right. Wow. So I think okay, I marked the level. So this was that PDH. That previous daily high. I'm teaching you something that wow, this is an amazing class. So I'm teaching you something that you can use as a weapon to your trading. Right? There's knowledge of liquidity imbalances. So if I was trying to sell Bitcoin, I'm looking to sell Bitcoin at the area where price would likely bounce off because I'm selling off the imbalance, right? So look at this. I would have waited for price to take out the PDH and give me a break of structure. So how to drive it? So you also combine the basics in market structure. So you have your PDH, higher high, higher low, higher high, higher low. This was the PDH level of PDH. This level was PDH. Market day was took out stops and then broke down. So those of us that are trading candles, you know the drill now. You already know the drill. You simply mark where you know the drill already. Mark the open. Wherever you saw the buy open. So you mark from here. Alright, or maybe if you're targeting maybe the last buy candles, target the last buy candle, which was there. Alright, for me, if the candle is giving me a week, I like marking the week as well. So I like marking the lower week of the buy candle, the last buy candle, right? So I put the lower week, right? So if you are trading this, we have done what? We have put this last buy candle be your candle of interest because after this buy candle happened, so this heavy sell, right? That gave us a break of structure, right? If you don't understand break of structure, please watch my bootcamp video. I talked all about that. So we had the BOS here. So this will be a very beautiful trade. We're not targeting the lower week, right? Because lower weeks are also areas of liquidity, right? So if it's me, I'm targeting either the lower week of this, or if I can't really find an imbalance here. So I'm not really open on the lower week of the candle, right? So I can't really find an imbalance here to kind of make me to go to the open. So the lower week would have been enough for me, right? Although this would have been the kind of interest, although this is the kind of interest actually, because this was the candle that actually took out stops. This particular one here. It was this candle, this one. That was one that actually took out stops. You can see the upper week, so one that took out stops. So I'm targeting this whole candle, right? If you pay the open on this candle, you can because activated. So this was the candle that actually took out stops, this particular one. Took out stops. This was just continuation buy candle, right? So if you are trading the 2 hour time frame and you're doing what I'm teaching you. Now price has come into the imbalance. That is what drives price. So when price came to the imbalance, what am I doing? I'm looking at for what? Opportunities to get involved in the market because that's what drives price. It drives price. And now, what am I looking for? I'm looking for liquidity to take us to offload my position. So I saw smart money. I told you that if you want to make money, follow the big guys. So smart money was they bought what and took out all these early sellers, right? So that means this buy positions needs to be mitigated, right? If you understand what mitigation is, please watch my video on the theory of mitigation. I kind of explain what mitigation is, or watch my video on the structure candles. Right? I'm not teaching the structure candles here. I'm not teaching smart money here. I'm not teaching you. I'm not teaching you liquidity and imbalances. So that imbalance was playing out here. Market did came up here, and the open of this candle would have been your best entry just here. Because you look at the candle that took out stop loss, so this would have been the best entry just at the open there. So that is around this level. Around this level. That be your entry just there. And stop loss were above the range high of the candle, right? So that is just using the 2 hour time frame. I'm just talking using benefit of hindsight, right? So I don't trade this coin, I don't trade this, right? So I'm not showing you how like this now I'm teaching you. It works on interest. So I don't speak Bitcoin. I think that I went to Ethereum and then I use Ethereum. I don't want the Bitcoin, right? This I'm teaching you is what drives price on whatever you're trading. Liquidity and imbalances on the bigger time frame, not 1 minute, 5 minutes, on the bigger time frame. You want to be capturing moves with the bigger time frame, right? So if I play this, I saw this, and my stop loss were above what's the high, right? Where would I be targeting? Remember that price is driven by or is drawn to liquidity and imbalances. So where is the liquidity here? Right? Where's the liquidity? If I saw there, where's liquidity? Yeah, just follow me. Just follow me. Liquidity where people want to get involved in the market. So believe me, there are dumb traders that will try to be buying here. They'll be like, support. So targeting here for their support. And you can see market even tricked them. This is a bit from teaching. So market actually came to this support zone, this low here, and it gave this kind of funny rejections. Okay, so would have been like last second before you buy. So they will target here as demand zone, right? But demand zone against structure is liquidity. Demand zone, let me clearly, demand zone against structure is liquidity. Supply zone against structure is liquidity. Whatever you're trading against structure is liquidity. So whatever you're trading, as long as it's against structure, although price may give you a rejection, right? It may happen, it may reject, but it's still liquidity. So if you are trying to hold this trade, maybe you are trying to capture this next high. So always look at, before you look at any other thing on your chart, always look at for liquidity. Always look at for what's structure. So this market was we only use imbalances and liquidity to understand what the bigger time frame is. As you saw that, use daily to explain. Did you just go to 4 hour? No, I didn't go to 4 hour. I was using the daily time frame to explain it, and then we are using our lower time frame that was catch our entries, right? So look at this. So if you're targeting here as your buy zone, you have been liquidated. If you're targeting here as your support zone, liquidated. I think this is the only place I kind of pay, and market is likely still going to come and liquidate here as well. Did it liquidate it?
Hello?
Let me get my tool and check.
Hello, sir.
Yes.
Your
I can hear you.
static now, sir.
Okay, just share it again. Alright, can you guys see my screen now? Can you guys see my screen now?
Yes, sir.
Is it moving? Alright, so as I was saying, now whenever you see the market give that break of structure, whatever was happening the previous time becomes liquidity. That means understand this concept. So if the market is doing what, creating a series of lower highs, lower low, lower high, lower low, lower high, lower low, immediately the market gives us a break of structure at this point automatically. Number one, watch this. Immediately the market gives the BOS and the retest holds, right? Immediately the market gives that BOS and this retest holds, like the market actually holds here, right? Every other zone that you have been setting up becomes liquidity. That is how the market is designed. So always look out for breaks of structure. Don't be trying to be a dump trader. Don't be dumb. Be smart. So whenever the market gives that break, whatever zone you are looking at selling before, like if there was no market break, we have been trying to sell off here, sell off all these supply zones, that would have been nice. But immediately the market breaks structure, automatically all these zones becomes what? Liquidity and areas of target for smart money. So if you are trying to buy this demand zone, although it was a nice one, but look at I'm taking out, and you see price has created equal lows here, right? If market should actually sell as it ought to, it's coming for here next, right? So that's it. So market is always inducing buyers. So now the dump buyers will be like, wow, we held. So I'm like, look at what the market has done here. The market has done what? That's created what? Equal what? Lows, liquidity. So when the market is done with whatever it's doing now, it's likely going to do what? Still come for here. Right? So, as I was saying, so whenever the market break and it holds, break and hold, not like it will break and then go lower, right? But if this ring test holds and makes a new high, every other here becomes what? Liquidity. So, if you understand that concept, you can know how to navigate the market. So, whenever you say BOS, whatever your bias was before automatically changes. You're not looking at those as what? Liquidity. So for me, if I saw there, I'll look at here, this zone for what? Take profits. So if I saw there, would have made a whooping 1:2.3, but still, I can't use 2 hours for. I'm just giving an analogy from benefit of hindsight, right? Typically, I can't use 2 hour candle for entry or stop loss. I'm just using this for an example, right? So you have made a whooping sum of 1:2.3 here. So if you are patient enough to hold here to the overall low, you have made what a 1:3 point, 3.10 or thereabouts, right? Somewhere around it will be your TP, right? So for me, I'm targeting what the next low. I mean, I'm targeting this low, not me, because I'm not. One thing I see thought that always targets the lowest hanging fruit, right? So whenever you see a 3, like you see a 3, this is where you have to learn how to manage your trades, right? So if you see a 3, you see a 3, something like a 3 here, right? And this is a 3 now with stem. And the tree is bearing fruits, right? You're seeing fruits on the tree, right? You're seeing all these fruits, and you're seeing fruits. Is it wise? For you? Maybe you are trying to harvest this fruit, and instead of you to start harvesting the lower ones, you say no, you're going to go for the high ones. What if you get bitten by a bee or a snake, or you fall and you lose, or maybe rain comes and beats you, right? You are not, and you're not able to uproot much from there because we're trying to get to the toughest part. You would have lost. But if you are taking the thing from the bottom, you are taking this lower hanging fruit, you uproot this one, or put this one, or put as you're going down, you're putting this lower one, you're throwing it down, as you're going higher, you're throwing it down, then it will have easier for you. So even if anything happens, you have still gotten something off the market. So what am I saying? Whenever you are trading, always target the easiest area to grab as your first take profit. Always look at the easiest area to grab. You're not trying to be catching. Some people want to sell. I know some people will be like, "Hey, I can see. I want to target this low. I can see this overall low, this protective low." So they will be like, "Let me just hold it from here." They will not even close partials. So they hold their trade. They want to catch a trade from here and take it all the way down. What's going on here? So they will not do what? Catch a trade and take it all the way down. That's what some people are. They want to catch 1:5 or 1 trade. And did it happen? Nope. So what am I saying? So whenever you're trading, make your trading easy. Always target the lowest hanging fruit. Even if you want to swing it, take off partial. So if I was catching this sell, hypothetically, I would have done what? I would have taken my profit at this lowest hanging fruit, which is this low. I've taken maybe 75% of my profits or 50%, whatever. However I feel like, right? But I usually take a great percentage of my profits when I'm taking profit. I don't just take small. I take 50%, 75%, sometimes 80%, right? I'm not giving the market back what I've already made. So I'm not the one controlling price. I'm not the one that is delivering price, right? So I cannot really tell the market is going to come down here, right? So I will just target this low hanging fruit. If it gets hit there, I will take partials and then it was target the next low. If let's assume here was broken, where will be the next place? You target where? The next major low. You can find it. Where is the major low? I'm targeting where? This one here. This point. What will be the next take profits? TP there. Where again? Here. Right. But in this scenario, I can see imbalance. After the imbalance, I saw on liquidity now. This is where imbalance is used as liquidity. So if I was trying to catch a trade there, I would have targeted. You can use imbalances for your take profits, right? The open of imbalances. So if I was trying to sell this, I would have targeted maybe here the open of this imbalance. And usually, open of imbalances are usually weeks. Note that. That's why I say that imbalance is a form of liquidity. But for clearance, for clarity purposes, we kind of separate it, right? So an imbalance open is usually a candle week. Usually, it's usually a candle week. So you can see that there's an imbalance. Look at this point here. Look at it. So there's an imbalance here, and the open of an imbalance is usually a week. That's why you can actually classify imbalance as liquidity, because people might want to get involved in this week, right? They want to get involved to buy because this was the last push down. Put at that trade mitigation, like last push down before heavy push, right? Last push down, like market open there, push down, and then bought impulsively. So that's why imbalance open. No, I'm saying open, not fill 50%. You can use the open of imbalances for take profits. So you cannot really find a low to take your partials. Use imbalance fields, right? You feel like so open imbalances for your PP, right? And not always don't forget to apply what we call risk reward ratio, right? That is how you use these things. Now let's look at what Bitcoin is doing currently. Right, so okay. Right, so what Bitcoin is doing currently is still doing what? Playing around that imbalance. Look at what Bitcoin has been doing. Right, so look at this. So the market was also bullish again. Yo, I've not seen Richard Taylor, so listen to you. So you can see it. I don't read Bitcoin. This is the first time I'm looking at Bitcoin chart in ages. I don't read Bitcoin because why don't I trade Bitcoin? Because of this. This you are seeing. I don't trade Bitcoin. I am not built to handle zigzag or funny movements. I'm a kind of trader that once I get involved in the market, I like seeing price moving. I don't like markets going up, going down. I don't really like. That's why I avoid this kind of market. I like. That's why it has I trade indices and those major pairs. But I like things that move fast, right? So I don't really trade Bitcoin because of this. This is let's see how many hours this has been. So market has literally been in this area for about this is 8 days and 6 hours, right? So this is not my kind of trade. I don't really like this kind of trade. I don't like it. I don't like charts in which I have to keep watching price come to my entry like 100 times. Right? In one trade, price come to my entry like 100 times. I will see $10 profit, 8, go to 10, come back to 8. I can't keep up with that. Like it's not my personality, right? That's why I don't really trade so many assets. I like trade assets that move quickly, fast RRR. That's why I kind of trade indices a lot because indices moves very fast, right? And I trade EUG, all those major pairs are very fluid, right? So I don't really trade Bitcoin. I prefer Ethereum. Ethereum is kind of more liquid than this, right? So what has market been doing? The market has been doing what? Has been still rebalancing the imbalance. So this was the high here, this high. Market has taken another high. Look at the structure of the market. So market was bullish to this point. So let's just mark that out. So I'm just showing you something. So have a higher high, a higher low, or higher high, and then what's a break? What? A break of structure. So market is not bearish. Right. So let me take this out. So let me just delete this. So I would have, do a drill. You mark out where smart money got involved in the market. This was where they got involved. Take all these equal highs, and the two price was lower. Get that BOS, right? And now I want to see something that there's a kind of BOS that you should ignore. Maybe I'll make a video on this, but I'll just use this for just to explain it. And sometimes I will call displacement. And what is displacement? Displacement is price giving a very strong break of structure. Not just you see the market giving one kind of funny week. You want to see the market give what a displacement. So look at this chart here. Where was the displacement? Right. So this is our high, low, high. So some people have been like, this week, this is not a BOS. Some people like using it, but for me, I know they can't look at BOS. But I want to see price give what a very strong and very strong. So if you have a candle like this, right? So you look at let's assume that this is a candle. Let me color that red. So red candle. So red candle. Right. So if we have the candle has an upper wick, and then you see the candle giving a lower wick, right? So I'm talking about. I don't want to see the market, I don't want to see the market do what to come and do something like this, right? This is not what I'm talking about. So if my higher low was there, let me just give an illustration. So a higher high, higher low, right? So those are higher high now, right? So I don't want the market to come and do something like this. Like this is the higher low is looking for a break of structure, right? I don't want to see the market do this. Just come and just give 1 week, like what kind of this is not a displacement. A displacement is when price does what? This is a displacement. This is it. Market does what? Clearly breaks that place, closing below. That is a displacement. You want to see price displace that low completely, not just come and tap it and then give one funny. Sometimes the week will be something like this. The week look at something that's not eating. One kind of funny week, The week will be like something like BUS or wise. So if someone sees as BUS, that's not a BUS for me. I like to see market do what? Displace that low completely. Clear it completely and close below. That's the displacement. So let's look back at what we're looking at on Bitcoin. The things I'm teaching you are things that are applicable to charts, right? So now we are still using the imbalance theory, right? So look at this. Surprise it was give it. Well, I would have looked at this. Okay, high. So and finally the market gave a weekly call. Market did is rotated back up and then it was displaced. See all these candles. This is the displacement. So currently Bitcoin is bearish, right? So Bitcoin is bearish, and we are trying to sell this market, we look at remember what I told you, the lowest hanging fruit. This is the lowest hanging fruit. Yeah, this low. You're not targeting the overall low, just here. And luckily for us, this is a kind of equal low. So a very nice low hanging fruit. So for me, Bitcoin is bearish because we are tapping into a D1 zone, and we should go lower to this point. So all this is just to frustrate you, because that's why I don't take Bitcoin, because of this. Just I can't keep up with. Because look at it's all I can do. Look how small it is. I can't keep up with that. That's why I don't trade it. Right? I like pairs that move, like moving pairs, because I know I kind of started trading with static indices, right? So static kind of fast. That's why I kind of used to learn how to like fast moving price. That's why I cannot really swing to it. Like that's let me just say this now. There is no general there's no general blueprint for success in financial market. The blueprint is inside you, and you have to discover it. You have to find out what works for you. If you're the kind of person that you do not like the concept of clicking buy and sell almost every time, then you could employ the swing trading approach and then build your skill. Remember, you build your skill around your personality, not that you build your personality around the skill. You build your skill around the personality. So if you're a kind of trader that prefers long-term moves, then you must learn how to identify big time frame moves. That means you're focusing on the daily, weekly, whatever. I know a guy that is always looking for daily moves. I know that's some of him, I know him, that's Mr. Wealthy and Godly, very good trader. He's always targeting what? Bigger time frame moves, right? He likes big time frame moves. You have Mr. Mazi, all of that. Some of you may know him. He's a very good trader. He targets what? Bigger time frame moves. Always catching trades 1 week. That's the kind of trader he does not enjoy clicking buy and sell or looking at that all the moment. And so what did he do? He built his eyes he trained his eyes to see bigger time frame moves, and he developed the patience to hold it. But for me, I don't have that kind of patience. I can't be holding a trade for 5 days or 6 days. So when he's doing this kind of thing, I can't do with it. So I built my trading around what short-term trades. Basically I trade between 15 minutes to 7, 8, 9 hours, right? So that is it. It's very rare that you find me hold a trade more than 24 hours. Let's say highest is let's say 12 hours, 13 hours, 14 hours. That's it. I don't really hold trades that long, right? So you have to build your trading according to the kind of person you are. If you have a patience to hold trades, fine. Build around holding. If you're a short-term trader, that's fine. For me, I'm very short-term, right? So I'm not trying to be short-term, because if your personality is not compatible with short-term trading and you try it, you're going to get your fingers burnt, believe me. So you must ask yourself what works best for you, and then you build your trading psychology towards that, right? So now, looking at Bitcoin, I can see that this was a kind of OB, like this was the last push before we finally had that displacement. Don't worry, I'll kind of clear this up. Orange. So look at let's make it positive. All right, so if I was looking at Bitcoin, I would look at what this last displacement, like this last candle. Looking at it clearly, it was a kind of a strong candle as well. So look at this, we had price do the same concept. Take out all these people, all these early sellers, and it was displaced below. So you look at that last push before was the displacement. So in this case, no more this can do again because it's now this recent. You got the most recent price action, right? So we have this displacement. So if I was trying to trade this, I would have been targeting was this lower week for my entry, right? I've just sold there and stop loss were above the week. We are targeting the lower hanging fruit just there. This will be my take profit, right? So Bitcoin, I said because the day was to jump to that point, right? So this is just it. So you're just using liquidity imbalances for your trade setup. So all these things are not your business. All these random moves, right? We have seen displacement, which is in line with the imbalance. So the sentiment today was to target to this low here. This relatively was equal low. So after the price is drawn towards liquidity, which comes in forms of retail patterns, PDH, PDL, PML, PMW, sorry, PMH, PMW, sorry, PML and PMH, right? All those abbreviations can be so confusing, right? So I'm selling Bitcoin. I'm selling here. Stop loss above here, and I can see here this low, right? That is it. That's simple as that. So now let's do some more back testing, and then let's see how this might be playing out, right? I've not done this on US 30, so let's just do it on US. No, I have a lot of markup on US 30, right? I don't want to be. I want a chart that does not have so much graffiti and lipstick, right? I want a chart that is fairly easy to read, right? Now I want to say something. The things I'm teaching you today, please don't go and start applying these things on your life account. This is not a financial advice. I'm just telling you that whenever someone teaches you something, you owe yourself the responsibility to go to your chart and look at. Trading is the only business that gives you access to the life scenario. Like you have the manual in your hand. If you're a doctor, right, you do not have the access to let's assume that you have not done maybe a brain surgery before. You wouldn't have access to someone's brain. Like I know that they have carcasses, but you wouldn't have access to a living person's brain. You can't come and say, please, Mr. Ayo, can you give me your brain? Let me just go and do some practicals and study your brain. No. So trading is one of those careers that gives you access to whatever you want. Everything is on your chart. For those of you that always say, I can't identify reaccumulation, I want to bring into your notice that you are simply a lazy and unserious fellow. Because these things are actually on your chart. These things are on your chart. You can go as far as 5 years back to look for these things. 5 years back. So if your chart is always with you, the chart, did they go on holidays? Nope. No holidays. Did they go on breaks? Nope. Are you paying for these charts? Nope. They're with you. So you owe yourself the duty to do what? To go to previous price data and do what? Look at the things they're teaching you. If you claim that what I am teaching, what something is not working, go to your chart and find places where it did not work. Now I have showed you 2 places where instrument candles have played out. Just 2 places. Just look at it. I don't play Bitcoin. So whatever I teach you on my, I have about 72 videos. So whatever I've ever taught on YouTube, go and look for them on your chart and prove to me that they are crap. Just prove to me. Go and find it on your chart and show me where show me that it doesn't play out. Now, I want to say something too. The fact that something works does not mean it will work 100% of the time. So there's no 100% strategy. There's nothing like 100%. Whoever that is a scammer and all of that. So what am I saying? Whenever something is being taught to you, do yourself that duty. Just give yourself that responsibility to go and check if it works. Before you say that something does not work, let it be that you actually went to and it did not work. Some people will like, suppose that does not work. Suppose that does not work. That's a lie. Look at this. Support. Did it work? Yep. Support again. Did this work? Nope. So that's why it's like, it's not 100%. At this point, support they know, but it's help. So it applies to smart money. There are times where these things hold, and there are times where they did not hold. So, but the fact that they hold, right, is a guarantee that it is not a lie. So what keeps it profitable is a working strategy plus a trading plan. It's not just about having the perfect strategy. If you smart people are playing that account every single day. So whenever anything is difficult, do yourself that favor to go to your channel and find it. I kind of organized a boot camp earlier this year, and I helped you guys to make the video to be at one possible. I kind of made a playlist earlier this month, so you don't have to go and look for the video separately. So I just made it together. So you just click on the playlist and see that was. So if markets, I told you the marketplace higher and higher lows. Now you can see this kind of charts. You can see it higher high, higher low, higher high, higher low. So these charts are there to verify if what I'm teaching you are a lie or they are true. So that is how you should be a trader. Always verify. So whenever something works, does it work? I'm teaching you liquidity imbalance now. So after today, go and look at this thing I'm teaching you and see the play out. Now I'm telling me, sir, please, beauty is going to play out. I'm not going to reply you. Don't come to my DM saying, sir, this imbalance, what do you think? I'm not thinking anything. Go and look. You have access to 5 years of data. So use this 5 years data to your advantage. You can go through chat for 5 years. Nobody is going to, you're not paying anybody to do that. But no, some people never do that. They just want to be asking irrelevant questions, right? So instead of asking irrelevant questions, use your time to do a backtest. Whatever is being taught, backtest it. Backtest it. Don't go and carry your live account and like now I said Bitcoin is going to sell. Some people go and sell Bitcoin now. They have maybe $50 in their account. They can load it up and their account will blow and they can't blame me. I want to be answer you. It's because you are not doing what I'm telling you. I'm teaching you two things. I'm teaching you balances. I'm teaching you what's right price. And I'm telling you that you should check if this is working. Does it work? And now I want to say something too. There are pairs that respond better to structure and there are pairs that are least respected to structure. For instance, gold. You know, gold is more from fundamentally driven. So if you're a smart money trader and you want to trade gold, you make wins, but I believe me, there are assets that you trade, you have more wins because there are assets that respect more of price algorithms, market structure, all those things. While there are some assets that respond more to market sentiment, fundamental happening. So there's an earthquake maybe in US capital. Some assets will sell for 5 months because of that earthquake and all of that. So there are assets that respond more to fundamental analysis and not necessarily technical. That an example of that is gold. Gold responds more to fundamental analysis and market sentiments than structure. So if you are a technical indicator on gold, it's not wise if you ignore fundamentals and sentimental analysis, right? So for me, I like assets that are more of technical, like US30, more of technical, so less of fundamentals and all of that, right? So now let's just look at another pair. Let's check another pair, and that will be the last thing for today. So you're using these two things on a bigger time frame to do what? To identify what the market is. Then which page should I use now? Let me just use GJ. GPP, JPY. Should I use GJ? I don't know. Let me see a pair I can use. Okay, let me use okay, USD Swiss franc, USD chip. Right? I don't trade this one as well. So let's see how would I be. You know, this first thing if you want to use this, you go to what? The monthly. You want to see what price is doing on the monthly. Let me make this auto. This is the last video, and then put it today, right? So the monthly has been kind of choppy. I can't really see anything clear, so I'll kind of go to the weekly. Right, this is why I don't play so many pairs. I don't really like all this kind of movements, right? Okay, so looking at this guy, I can see something here. What do? We took out what? Liquidity. This equal lows here, a relatively equal lows. I've told you it must not be equal. So we are taking out what? Liquidity. I've told you that market is drawn to liquidity. So have I not shown you another proof? First touch, second touch. Some people would have been like, almost since let's see how many weeks this thing bought. This market bought for how many weeks from here? It bought for about 28 days. That's about a month, right? So some people will be like, wow, triple top, one touch, second touch. And market was coming here, would have been some people have go borrow people money and say, we have a life-changing product here. Market is coming to give us a triple top and it's going to be a long buy. Please, can you give me money to trade? Some people can carry people money to invest and the end up the Bible says that the Bible says that you're not a Christian, forgive me, but me I'm a Christian, so I'm not sure what the Bible says. The Bible says that your little end should be better than your. Can you guys hear me? Can you guys hear me?
Yes.
All right, someone is speaking. Can you guys hear me? All right, so my name is Kwame. So let me conclude with this. All right, let me conclude with this. So as I was saying, if you are trying to buy this, this is so. I'm telling you that market is drawn to what's liquidity and imbalance. So if you think I'm lying, go to your chart, mark out levels that people who are looking to buy, and oh my God, I'm missing something here. Look at this. Sit. Look at this. Look at this. So people are trying to do what? To sell here. And that was an area of liquidity. So price is drawn towards liquidity. So yeah, I get to them out. And it still crashed. So have you seen it? So market is drawn to liquidity levels on bigger time frames and imbalance to fill them. So use this advantage to know where price is going to on the long term. So if I saw this spot and I saw this touch, believe me, I would never have bought this market. Never. I wouldn't even try it. I've seen this touch, and knowing that if you bought this market, your previous self would have been better than the current self, because your previous self would have been the kind of loss that you would have been. Right? So that's why you are very good in this. Maybe you're like, since the weekend time frame, it's maybe manipulation. So you're basically holding this sell. You held it, market was just going up there. I mean, you saw it by candle. Like, a coffee candle, you now bought, you put the expert it. It's a first break. Market was jumping lower. Right? And you can see, market was jumping lower and lower and lower. So I'm teaching you that market is drawn towards liquidity areas and imbalances on the bigger time frame. I'm not saying you should use the time. Now, look at this chart. What again can we see here? We can see what's imbalance here. Imbalance. Okay? So market should do what? Come for imbalance. So market has done what? Has gone for the first draw. Look at it. There was equal high here. Market did what? They went for the equal highs. They draw. It's like a magnet. Things are like magnets drawing the price algorithm. So market did what? Went for equal highs, took it out, and gave a BOS. And this was a very beautiful setup, right? So break construction. So remember, I told that you want to see that displacement. Look at it. Where is the displacement candle? This is it. Look at the candle. Look at this candle. This candle is clearly what? Displaced, broke that was low. Right? So if you are there, so you are looking at maybe even as soon as you are playing the open of this candle. I'm not using a hypothesis now. So this was the buy candle took out stop loss. So if you play the open of it, above here. Well, this is a week time frame. I'm not showing you this works on time frame, right? So I'm not saying week time frame. Of course, you can't use week time to do your stop loss. I'm not showing something. I don't know what's time frame, but I want to wrap up the class now. And then how I can't take my battery is kind of low. I can't take questions. So if you have a question, just drop it in the comment section. What I will do is that I will read through the comments and then I will make like how I did a bootcamp. What I did in the bootcamp was that I took all the questions because some of you may be asking the same things since are kind of related. I don't want to waste my time with that. So if you have a question, drop it in the comment section so I can use it to make a video and answer all the questions. So just pick a number one. This is my question. If possible, add a chat so I'm able to understand it better, right? So don't come telling me, sir, something happened on GE the other day. I don't have the strength of that, right? So if you have a question on this, just it's okay. If you have a backtesting, right? After backtesting and you saw they had an issue, this I'm teaching you, right? So you could just screenshot it, drop a question in the comment section, and then I will go through all the questions. The ones that I like, I'll combine it and kind of make a class on it, right? So if you try to sell this, remember what I told you. You saw this at the retest, break construction, retest. This is instruction kind of playing out again. This is the proof that what I'm teaching you works. I've shown you 3 instructions just here, and none failed. Although it's failed, but I want to know what I failed here. So BS, retest, and where? I've told you always target the lowest hanging fruits first of all. Lowest hanging fruits. So for me, I am targeting this as my lowest hanging fruits. This one here, this low here. first low hanging fruit. So we're targeting that low. That would have been 1:2. So where's the next place? This overall low now. That would have been your overall TP. So although market kind of came up a bit in digital but it will have still been what a beautiful 1:3. Right? So I'm not showing you how this thing works. And this applies to any time frame. Right? So this is a bigger time frame to what the market is going to do. And you still use the same concept to do what? To trade on the smaller time frame. Right? Imbalances, liquidity. Imbalances, liquidity. Imbalances, liquidity. Imbalances gives you the entry, and liquidity gives you what? The take profits. Right? So see this. So we came to this low, and now what do we have here? All this place was what? Properly balanced. I've told you the market is designed to buy, sell. Make sure you feel imbalances. So let's look at this point. If I was looking at here, right, from this point, so from this point, right, so we had this here, market is feeling imbalances, right? So let's look at this. So at this point here, we had imbalance here. That's why the market is bought on the way up. So there was an imbalance. The market could not just sell because it has been very impulsive. It was an impulsive 3 week candle. So market had to do was call for imbalances, right? So by so this, I will wait for the market to come and feed the imbalances here. As you can see, with benefit of hindsight, you can see the market played as we ought to have anticipated. Markets, came for that imbalance. Wow, you see, market came to the imbalance, even filled it, went above a bit, right? So, and it did what? Remember that market is drawn to imbalance and liquidity. This liquidity was still drawing price. Look at this. Wow. Obviously, this heavy candle. This liquidity was still drawing price. It's like a magnet. It keeps drawing price. Liquidity imbalance are what drives price, right? So look at this. So see, so I'm teaching you. So price is doing. So you can see the market is doing what? That's feeding balance. Am I still in imbalance? So I think I'm seeing something here, kind of tiny imbalance here. The price feed that one. Okay. Always look at the most recent imbalance, right? Look at the most recent one. So this is what I'm looking at. So not really. Just look at the most recent imbalance, the most recent one. Right. Let's see what price it. Let me this faster. Right. So let me be a bit faster. Right. So a bit faster now. Let's see if price actually went for that one. Market was still playing inside the imbalance region. And remember that target is always there. So if I saw this imbalance field, oh my God, I've seen something beautiful now. Now, let's see something there. So now this imbalance was filled, and what the market do? The market took out a kind of weekly high. Right? Some people have been trying to see this as what resistance here. So market kind of took out that point, and then went higher, gave a kind of a snap candle, and that's why it's really lower. So always be careful with those things. Always make sure you're not liquid for markets. So market has been balance. So take out highs. After market take out liquidity and highs, what again is it looking for? It's going to sell to the next area of interest. So the market should likely do what? Sell to this point. Liquidity. I have shown you areas where liquidity was clapped. This is what drives price. In this kind of chart, you shouldn't be looking to buy this. This is how you know what the market is going to do. As you have a bearish bias, you're looking out for what? Only sell opportunities. Market has feeding balance, cannot this equal highs. What are you looking for? What are you trying to buy markets here? No points. You should look out for what? Sell opportunities. Right? Maybe the next video I'll kind of show you how to leverage on that. Look at what market did. I would say market is just being drawn. Look at something. Look at as if something is just dragging it. Look at market just look at it. Something is just dragging price towards the imbalance. And market saw the equal lows and what? It's an imbalance here now. So this is how the market is designed. So now let's take something. Once a market takes out an area of liquidity, then and then only can you now look out for what opportunities to do what to go higher. So now you have an imbalance here. So if you are trying to buy these markets, since market has taken out towards the lows, which is the area of liquidity, the market does not really have any reason to sell further, right? Although it may be risky, it may kind of dig back, but then if I saw this imbalance, I would have been buying. No, look at this. This is how you use this, right? You're using the order flow of the market to know the direction to trade. So if market has taken out the liquidity here, so and you're seeing maybe a breakout, this is a weekly time frame, and maybe you're seeing a BOS or maybe a 4 hour, where will be your target? You're looking at to buy where towards this magnet. The magnets are liquidity and what? Imbalances. That is it. So if I saw market clear, I'm looking for what buy opportunities to fill this imbalance. And now the market feed the imbalance. This is what the market did. Remember, if you have a question, just drop it in the comment section. I'll go through all the questions and then make a video on that. I don't want to start taking questions now. It's kind of take my time, and I want to do something else. My rate is slow. Already 34%. So I want to make this class longer than this. Right? This is a free class, and that is it. Right? Alright. Can you guys hear me? Someone said there's no sound. Can you guys hear me? Can you guys hear me?
Yes, sir, we can. I can.
Okay, I think it's network or something. I think it's network. Alright. Okay. So this is so price. Oh my god, this is beautiful. Price feed the imbalance. So if you're trading this way, okay, you have an instrument candle here now. An instrument candle. I did was I took out was stops. Alright, so we have an instrument candle here. Took out stop and then gave it displacement. So price should do what? Should likely come for this. So this was it. This was it. So now we have a this. Right. So right. So one thing about institutional candles is that institutional candles do not always get activated immediately. It take days. Right. That's why by institutional candle I don't really trade. I just wait for price to go there. I don't really I don't really like buying against institutional candles because it will just keep selling forever. So it's mostly equal lows that I kind of by seeing equal lows clap there and look for. But look at it, market still came back there. Let's see if it held. I think that should be a BOS here. Then market was tired of selling, so we had a break of structure here. Is it a BOS? I want to see price clearly displace that point. I want to see price clearly displace there, right? Market closes above, then we have a displacement. So you absolutely see how it failed at this point. You see, we failed. It failed only once, and we won most of the time. So if I was looking at this, I have seen okay break of structure. So now I remember I've told you imbalances are what drives price. If I saw this break of structure, I would have looked at for what's imbalance, and imbalances at where premium levels or discount levels. So I'll mark from here to here. So is that imbalance at premium level? It's slightly above. Okay, let's see. So we have what a break of structure on the weekly time frame. Okay, clearly last lower hold displacing it clearly. So we have imbalance here. We also have another imbalance down here. Right. So I would have more comfortable with this lower one because it is more in my premium array. Right. So let's see. So the market did. They just backtesting this to see what the market did. Right. So markets came for imbalance. I will say it's rejecting the imbalance. So markets came for closer to the discount level, which is 0.5. So that you always look out for these imbalances at the discount levels, discounts and premium levels, not just any imbalance. So 0.5%. That's why I thought I was more comfortable with this lower one and the higher one. So now we have gone below that higher one. So have you seen it? I don't think you guys check, but I'm still able to call it tops and bottoms, right? So markets kind of feel the imbalance and still continue going lower. Note that if you're trading imbalances, price can kind of weak above, but it should not completely displace that imbalance. It could close below a bit, but it must still be around that zone. It must not come and it must not displace. Let me see. Amazing. Can you see how beautiful price is the reaction of the imbalance? I don't trade USD chart. This is the first time I'm looking at USD chart like in ages. Are you seeing how what I'm teaching you is playing out perfect? Right, so if I saw this, I would looking for buys. I've told you that at discount levels is where I'm looking for buys. Discount levels, 50% and below, and 50% and above. So beautiful buy, tap there, and where are we targeting? This high. So this high becomes our area of target. So let's see the price actually go to that high. And let's see what happens. And this is the last thing. Okay, price came a bit lower to fill another imbalance, which was created there. Right, there was another imbalance inside created by this candle. Market came to fill it, and you see, market fill the imbalance. The market actually got to that high. Let's just look at and see the market got to that high. Alright, let's make it faster. This is the last thing. Alright, so let's see the market got to that high. So if I was there, I would have been buying the buying the imbalances, using the imbalances. Okay, remember when you're doing imbalances, wait for BOS. wait for a break or so. Don't just enter like that. You're going to cry. Right? This is a weekly time frame. You're using weekly time frame to understand the order flow of the market. This is just order flow. I'm teaching you order flow. Right? So this is it. Market is still playing a rather imbalance. So I should be targeting on this high, this higher high, because now it's a bullish market. So targeting the higher high. Let's see if price hits a higher high. Let's see. This would have been a kind of wow. This price, this chart has been funny. Just going up, down, up, down, up, down. This is if you're I caught scarf for swing traders. Imagine holding this kind of thing. This would have been the high very for your overall TP. And in this case, there was not really any low hanging fruits. Unless maybe I bought let's assume maybe I bought here, and I'm targeting maybe this high for my low hanging fruits. Let's see what the market did. I think I just end it and see. I'm just the end of this, right? Let's see if market actually went to that high, or if you are still in the. Oh my! You see it? Beautiful. Can you see it? Suddenly got to that high. This is it. And now I've given you another proof that these things work. I don't trade USD Chef. I don't trade BTC. So I was kind of choosing what to. I was kind of guessing which one to choose. This thing works on whatever chart you're trading, whatever imbalances, liquidity, the strong candles. You're combining smart money with the drivers of price. All right. So remember what I told you. Smart money is not what is printing up buy. Someone was arguing with me that smart money is not printing candles. It's not something that's printing candles. It's the price algorithm that's printing candles. It's not smart money. Please be guided. It's not smart money that's printing a candle. It's the price algorithm printing the candles. Smart money only gets involved in certain areas in the market. That's only when they get involved. It's not the ones making market to go up there. But all this thing is not really necessarily smart money that's doing this. It could be maybe a hedge bank, right? There are people that actually kind of manipulate price, but it's not all the time. Sometimes it's just price delivery. And you can see price. I told the market should do what? Should get to this higher high because we're combining structure, liquidity, and all those things. Look at market. The market did higher high. Yes, it did. Did I say it beforehand? Yes, I did. So that's a proof. So, ladies and gentlemen, this is a proof that trading is more than your resistance, your harmonic patterns, more than your strategy, your whatever you're trading. These are the drivers of price, right? So, if you have a question, just drop it in the comment section. I can't take questions now. I want to end the class. My battery is already down. So, this is the end of the free class. So, this is what the mentees of Elektronfx have access to. We teach them these things in detail, right? You see, I can't really teach all this. We have classes every Sunday, right? I can't really teach all this on YouTube for free because these are not things that we could actually lay out there for now, right? They have to also reserve something for our students, make them exceptional, right? So I think with this, where the class comes to an end. So if you have a question, drop it in the comment section. And until next time, be safe.
Nice, sir. Thank you, sir.
I'll be sending the recording to YouTube. Like I'll be putting the recording to YouTube. Right. So until next time, be safe.